In this video, I'm going to be discussing with you very quickly how to stop predicting the market and to start following the waves. Stop predicting the market, predicting the market, the market, and start following the waves. How to stop predicting the market and start following the waves. This is very important, and I want you to really listen to this video with an open heart. It's very important that you get the message in this video. You see, forex traders, especially those that are not exposed to the nitty-gritty of the market, they tend to stand on the purview of let me predict where the market will go. And oftentimes, when the market goes in their direction, they think predicting the market is the way to go. But on an intermediate term, and of course, on the long run, such traders, they are going to end up blowing their money. They will end up being frustrated in the market. And of course, their conclusion will now be that forex is a scam. You see, I want to show you in this video how to use what we call DOSTOLE evaluation. This is PMI, one of the discovery of our 6 years of research, into the forex market. This is an evaluation that whatever strategy you chose to employ or adopt or adapt, in this forex market, you can subject the strategy to this evaluation to see to what degree this strategy is in line with some of the requirements of this evaluation. This Dostal evaluation is going to change how you approach the market from predicting the market to just following the waves. And I'm going to run through it very quickly. I'll probably now go to the chart to show you step by step how to follow the evaluation. This Dostal evaluation is an acronym with the D stand for directional bias. You see, the first thing you want to know, you want to ascertain, or the first evaluation you are expected to do if you want to stop predicting the market and start to follow the waves, is that you must look for a way to be able to define the bias of the market, the directional bias of the market. This is important. Of course, at Potential Miners International, we have our trading models and we have different trading frameworks, that we engage. However, regardless of whatever strategy you are using, even if it's not purely PMI strategy, you must ask yourself, have I been able to define or identify the directional bias? It's very important. Whatever time frame you want to pick, you must be able to say, I'm going to define the directional bias of the market on this particular time frame. This is an evaluation that you must incorporate into your trading strategy. You see, I'm going to use one of the models or framework that we trade at Potential Miners International to show you how to go about this Dostal evaluation. However, what is important, we are not preaching strategy here. What I'm trying to show you is whatever strategy you are using, you must be able to evaluate the directional bias of the market. Regardless of the time frame you want to choose, you must tell yourself, before I trade the market, given the fact that predicting the market is not the way to go, following the waves is the way to go. But oftentimes people say, I follow the wave, but you will realize that at the end of the day, most of the time they are trading against the wave. This is because they were not able to even define the direction of the market. I'm going to show you what we do at Potential Miners International. Of course, even as I itemize this evaluation, let me quickly give you idea of how we approach our trading at Potential Miners International to the degree to which we are certain that we are following the waves and not predicting the market. So on the weekly time frame, that is where we do our directional bias analysis. It's very important. In fact, at Potential Miners International, we have tools that we engage such that we are not going to be subjective about this. You just plug in the tools, and the tool will show you what is the directional bias. With that, you will not there it won't be a question of maybe you are feeling like it's going this way, or you somebody said it's going this way and you feel that is the direction of the market. On the weekly, that's where we evaluate the directional bias. I'm still going to show you on the chart, but let's just follow the Dostole evaluation so that you will understand what this Dostole evaluation is all about. Okay, the next one is O, and that stands from orientation of the market. Orientation of the market. This is very important. You see, and we do this on the monthly chart. The orientation of the market is like you are looking at the bigger picture of the market, where the market is likely going, on a bigger scale, probably in the next 2-3 months or 4 months. You see, and this is really going to help you to further rationalize your choice of the direction of the market, because we don't want your directional bias to be subjective. So it means that whatever directional bias you are picking, it should be that is going to dovetail into the bigger picture of what the market is doing. Are you getting it now? So on the monthly, we look at the orientation of the market. And of course, I've done a video on this. We have 4 different types of orientation of the market, the major ones. Every other one will probably now be a subset. We have the markup, that is an uptrend. When you overview the monthly chart and you see, an uptrend, higher high, higher low, you know that this is a markup. And of course, on the flip side, you have the markdown, and that is a downtrend. Markup, markdown, then you have the accumulation phase, and you have the distribution phase. The accumulation phase is what you get after a steady markdown, like after a downtrend. You get an accumulation phase. Is like a ranging phase that follows a downtrend. And of course, a distribution phase of distribution orientation is what you get after a markup, after an uptrend. You might need to search for this video on this channel. I've done a separate video explaining market orientation, but it's very important before you take any trade. Your trading strategy should incorporate orientation analysis. What is the bigger picture of this particular market? Where is the market going? At Potential Miners International, we do our orientation analysis on the monthly, and that is because our analysis is holistic and we are trading from a professional standpoint, and we are not necessarily scalpers at Potential Miners International. So we take our time to pick the best time frame that can give us the overall picture of what the market is likely going to do in the next 3, 4, or 5 months. You get it now? So that is orientation of the market. The next acronym is the next thing is the ST. This ST stands for structure and tide. Structure and tide. This is very important. In fact, if you are able to spot the directional bias and you know the orientation of the market, you are not expected to jump into the trade, because if the structure is against the orientation of the market, you are still going to continually blow your money. Or if the tide is I'm going to explain what this means when I get to the chart. I will show you what structure means. I will show you what the tide means. And of course, we have tools that we have plugged in. These are free tools that you can use that will show you at a glance the structure of the market and the tide of the market. So you are not doing any difficult analysis or any complex analysis. You just look at the market, you plug in the tools, provided you have the setup. These are PMI based tools, and of course there are free tools that is available for everyone, but we have tweaked these tools to fit our own expectation of the structure and the tide. So I'm going to show you that, but then it's very important that you have an understanding of what the structure is and what the tide is. You see, if you have a downtrend on the monthly, for instance, if a monthly trend is going to correct, if you scale down to probably daily, you might even think that you have an uptrend on daily. Meanwhile, the trend is still a downtrend, but it's just a corrective move. But because the time frame is lower now, you'll be seeing something like it's an uptrend on the daily. You see it now. So you must be able to align your strategy such that the directional bias is in alignment with the orientation of the market, and of course it's also in alignment with the structure and the tide, or let me say the structure and the tide now should be in alignment with the directional bias. So that is ST, structure and tide. The next letter will be OL, and that is what we call order block and liquidity zone. This is very important. Whatever strategy you are using in the forex market, is important that you are able to incorporate evaluation of order block or liquidity zone. I said order block because you see we have two different categories of liquidity zones. We have the one that is blocked, we have the one that is unblocked. Are you getting it now? So if you want to take any trade, whatever will move that trade in your favor should be liquidity. So liquidity must be resident around the area where you want to. That's what some people call area of confluence. There must be money there, resident there. And of course, like I said, is either the money is blocked in terms of order block, or the money is residing below a swing low or above a swing high. That is the one we call unblocked liquidity zone. Are you getting it now? So you must be able to ascertain or evaluate that if I want to buy, the market should come to an area where there is money. Because if the market is not within an area where there is money, definitely if you buy there, the market will has higher tendency to stop you out looking for liquidity. The market will always be looking for liquidity. So before you can say that you have a strategy, you must ensure that you have evaluated your strategy on the basis of this Dostole evaluation. If you are to pick trade, are you picking trade in an area where there is liquidity? Is either a blocked liquidity or unblocked liquidity? I might still take my time to do a separate video where I'm going to explain with example what we mean by blocked liquidity and unblocked liquidity. However, the point I'm trying to establish here is that one of the evaluation that you are expected to do as a forex trader is you want to be taking trade when the market is around area of liquidity, whether block or unblock. Now, the last one is engulfing move. Engulfing move. This is very important. In fact, for some people, their strategy is perfect in terms of directional bias, it's perfect in terms of orientation, in terms of structure and tide, and even other block. But this last evaluation is what their strategy is missing. Why? When the market trade back into area of liquidity, whether it's blocked or unblocked, they just take the trade immediately. You are not expected to do that. Because if you take the trade immediately, it means you are still predicting the market. That once it comes to an area of order block, once it comes to my order block, I'm going to sell. Once it comes to my order block, I'm going to buy. You are thinking that the market will do that. You are expected to wait and observe what the market will do once it gets to that area of liquidity. In fact, the area of liquidity for some people is area of support and resistance. Money is resident there, and they think, okay, let me pick the trade, immediately gets to my resistance. All of a sudden, they will realize that the market will shoot up and break that resistance zone. You get it now? So anytime you have the price come to an area of liquidity, whatever you define as area of liquidity, you must look out for a price action that engulf in favor of the direction you want to trade. For instance, suppose your area of liquidity is a support zone. If the market comes down and hits that area of liquidity, you are not expected to take the trade immediately. If you do that, it means you are predicting the market. Don't try to predict the market. Just overview the market and see what the market is doing and follow the wave. That's what you are expected to do, because this market is controlled by a lot of factor, a lot of uncertainty. You need to be precise in your approach of trading the market. That is when you can trade with an edge. You get it now? So once your price come to the area of support, suppose you have defined an area of support to be your area of liquidity now, you are to expect an engulfing move in favor of a buy before you take a position. That means you are observing the market, what the market is doing. So once the market gets to an area of liquidity, this is very important. This is very central. I want you to overview whatever strategy you are using. If your strategy is lacking in any of this evaluation, you will notice that you will be struggling with this strategy. And go and check it. If you have any strategy that is probably delivering results, even if it's not, a significant result like that, it will be that the strategy is in alignment with this evaluation. This 5-step evaluation: directional bias, orientation of the market, structure and tide, order block and liquidity zone, and engulfing move. Once your price comes to an area of liquidity, observe the market to see, have I gotten an engulfing move? It's after you have gotten an engulfing move that you can take a position and expect that the probability will play in your favor. You see it now. In the forex market, there is no 100% certainty, but your analysis should incorporate this Dostole evaluation for you to really be able to touch a level of profitability in the market. Let me now quickly show you what we do at Potential Miners International. Like I said, let me just put the time frame for order evaluation. The structure and tide, we do that on the daily and the 4 hours, and the 4 hours. Yeah, the order block, we do that on the daily as well, and on the 4 hours, and probably 1 hour, depending on the wave you want to catch. And of course, on the for engulfing move, we do that on the 1 hour, strictly on the 1 hour or 4 hours, depending on the or 4 hours. But most of the time, if we are taking a daily wave, we take it on 1 hour. So this is going to be on the daily or 4 hours. But I'm going to use a daily wave to explain to you on the chart, so that you will see what we do at Potential Miners International. And of course, this is based on our own trading system. You see it now. So let's just go. Let's use now. I want to stress this: before you come to this Dostole evaluation, you must know that at Potential Miners International, we have 3 levels of analysis. We have the fundamental storyline, we have the sentiment storyline. These 2 level of analysis, these are what we do to pick the asset we are to trade. Then is when you now get to the technical storyline that you will now be looking at this Dostole evaluation. Are you getting it now? So at Potential Miners International, currently we know that the market is in a risk on overview. Because of that, we know that the tendency that the market, the capital will be flowing away from JPY is very high. Remember that anything in the market is on probability. So because we are on a risk on market overview or sentiment, we know that the likelihood of capital flowing away from JPY is very high, and the likelihood of capital flowing into high yield currencies is very high too. So high yield currencies means currencies with high interest rates. So we have currencies like GBP, the interest rate is around 4%. US dollars, the interest rate is around 4%, and AUD, Australian dollar, the interest rate is around 3.6%. If you check your chart now, you will notice that most of these GBP JPY, USD JPY, they are on a bull run. The reason for that is because capital is flowing predominantly away from JPY into US dollars with 4% interest rate, into Australian dollar with 3.6% interest rate, and GBP which is 4% interest rate. JPY has 0.5% interest rate. So based on the fundamental analysis and the sentiment analysis, we were able to pick assets that we could trade. We could trade USD JPY, we could trade GBP JPY, we could trade AUD JPY. Currently, you will notice that gold has not been giving you any move. The reason is because we are in a risk on environment, and the fear in the market by the gauges we use is very low. So there is no fundamental sentiment reason why gold is going to buy for now. You know, if you are not careful with gold now, you will probably blow all the money that you have made from January, because currently there is no panic in the market. The volatility in the fixed index is around 16, and of course anytime you have the fix below 20, you will know that is showing you that there is no panic in the market. There's a level of stability in the market, and we now have a risk on, which means investors, they are ready to put their money on the line, which means capital will be flowing into high yield commodities or high yield currencies. Are you getting it now? So back to the Dostole evaluation, we have picked AUD JPY for instance, and of course we are expecting to pick trade on either AUD JPY, USD JPY, GBP JPY. In fact, most of the trade that we have picked in the past 2 weeks, they are on this JPY pairs because of our fundamental and sentiment analysis. So but now, how do you do the Dostole evaluation? I said that you are expected to go to your weekly to see what is the position of the price. The price is expected to give you a clear directional bias. In this case now, we have the directional bias to be a buy. Why? Because using our evaluation tool, the directional bias, the price is above the cloud on the weekly. So once you get to this chart and you plug in your tools, you just overview that where is the price currently. Is it above the cloud or below the cloud? If on the weekly the price is above the cloud, it means you have a buy directional bias. Once you see that, don't even think of selling. Don't even think of selling, because the directional bias is a buy. So the next thing is you want to do orientation of the market. The orientation of the market on the monthly now is predominantly a buy or markup orientation. If I'm to draw it for you, just to show you, you will see something like higher high, higher low, higher high, higher low, higher high, and we are expecting that this AUD JPY should be pushing up, at least for now, till it get to 109.81, something around that on the minimum. So we have confirmed our orientation of the market. Of course, anything can happen in the market, but as of now, the expectation, orientation of the market means the long run expectation of the move of that particular asset. Are you getting it now? So we have done the directional bias, we have a buy. The market orientation is a markup, which means an upward trend. You go to your daily. Now this is where I want you to pay close attention. You know, on the daily we talk about ST, which is structure and tide. The second tool that we use at Potential Miners International will draw your market structure for you effortlessly. You just plug in the two, use the PMI settings. It's going to draw your market structure for you. You don't need to wrap your head for anything. So you will notice that if you can see my chart closely, you will notice that we have a break of structure here, and we have been doing a change of character. I beg your pardon. From here, we have break of structure to the upside, break of structure to the upside, break of structure to the upside. This is showing you that the structure of the market. Note, you will view the structure of the market on the 4 hours, on the daily and on the 4 hours. If you are to use PMI trading system that is using this evaluation now, this Dostole evaluation. Now, on the daily, you have the structure to be a buy structure. Now, if you look at the daily, the cloud on the daily is the tide. The cloud on the daily and the 4 hours is the tide, not the directional bias now. Because you can have a market that is giving you a bi-directional bias, but the tide will be a sell. You get it now. If you go and check GBP USD currently, the directional bias is still a buy. Are you getting it now? But when you get to the daily, you will notice that the tide is still a sell. So you are not to take any trade on GBP USD. You won't be able to define the trend. Are you getting it now? So once you get to your daily, you want to see what is the structure. That is the first thing. The structure should be a buy once the orientation of the market is a buy. Then, in addition to the structure, the price must be above the cloud. Above the cloud is what defines tide on daily and 4 hours. Are you getting it? I hope you get this. If you don't get this, you might need to rewind this video and listen to it closely. If you can do this, believe me, you before the end of the year, you will pick a trade that you will see profit. I can guarantee you, plus or minus, if you can apply this Dostole evaluation, especially when you use the PMI approach, you will pick trade that will give you profit, even if it's 1 or 2 trades before the end of the year. Are you getting it now? So to just recap what I've said on the daily now, once you get to the daily, you want to check the structure of the market, and you are not to draw it yourself. Don't stress yourself. Don't stress your brain. Trading is not supposed to be hard. Let the tool draw the structure for you. You see, it's a tool that if you can know how to set it, using PMI approach. Of course, I can give the settings for free. We don't charge you to get this tool. It's free. These are indicators that are made free on the charting platform. But you need the setup, based on our own research. So put the setup and it will draw your structure for you. You are to expect a buy structure if the directional bias is a buy on a weekly. Then in addition, the price must be above the cloud. On the daily and on the 4 hours, the cloud is showing the tide. You get it now. So we move to, you can see it now. We pick a trade on AUD-JPY. It has delivered, and of course, we will still pick trade because the conditions are still there. So you go to the 4 hours. Let's see, when you go to the 4 hours, you want to see the structure must also be a buy on the 4 hours, and the tide must be uptrend, which means for a directional bias that is buy on the weekly, once you get to your 4 hours, the tide must also be a buy, which means the price must be above the cloud. And the structure, this is very important. In fact, let me show you how we pick the trade that I'm talking about. Let me just go back, and show you. This was where we positioned for the trade. This is the daily. We have a correction. Let me just see. And you see, this is the correction, the daily correction. After 1 day of correction, I'm not showing you strategy now. I'm just showing you the Dostole evaluation and how we have applied it. You see, we pick ratio 1:4 on this trade now, and it has delivered. You see, now after the 1 day of correction, you see, you are expecting that the structure is going to turn to be a buy on 4 hours too. Then you are waiting for one full 4 hours candle to correct. After that, you expect your price to look for liquidity. Now, your area of liquidity can be this other block or an unblock, liquidity that is below this particular correction. So the price slashed down. This is an unblocked liquidity now. You get it now. So we move to 1 hour. This was where we now pick the trade on the 1 hour chart. This was supposed to be the other block. The price did not come there. And of course, we have two types of liquidity zone. Is either is blocked or unblocked. So we use the unblocked liquidity zone, I beg your pardon. So the price slashed down, taking out all the others below this swing low. You see it now. I said unblocked liquidity zone is an area below a swing low or a swing high, depending on whether you are buying or you are selling. So the price slashed down, took out all the money below this swing low, and of course we now have an engulfing move. This was the move. This was the move that we targeted, and we position for this trade here. So the price, so your entry point was supposed to be around this place, and for this particular trade is going to be ratio 1:4. So we picked it, and it has already delivered ratio 1:4. Are you getting it? Because this is a cash flow trading framework. We use a cash flow framework to pick this trade. This is how you can follow the wave. But if you say you want to be predicting the market is overbought, anytime you hear something like overbought, oversold, the person is trying to predict the next move of the market. But you are not supposed to predict the next move. You are supposed to follow the waves. This is how you can approach forex trading, anytime that you can be relaxed and you will be confident that you will make money in the market. I want you to sit on this video. If this video do not change your trading, there is no video again you will watch that will change your trading. If you listen to this video and you apply all that I've explained to your trading, maybe strategy or pattern, you define the directional bias, you know the orientation of the market, you are able to pick the structure and the tide. Are you getting it now? You identify other block or area of liquidity. Then you wait for market to give you an engulfing move before you take a trade. If this video do not change your trading, I will advise you just stop trading, because no other video will change your trading. It means you do not apply it. I want to encourage you. I'm not charging you for anything. This information is a premium information. If you can sit on it, look at your trading strategy, look at the DOSTOLE evaluation. This is PMI centered. It's a result of 6 years plus research. Use your trading system, look at the evaluation, the DOSTOLE evaluation. Now begin to tweak your trading strategy to fit into this DOSTOLE evaluation. Or if you don't want to stress yourself, just use PMI trading framework. Of course, most of our framework, I've discussed it on this channel. I've explained most of the strategies on this channel. And of course, if you know you still need further explanation, that is when you might now need to chat me. Is to say you really need maybe a one-on-one coaching, or you want me to show you how to do our fundamental and sentiment analysis. That is when you can now chat us. But this video is going to change your narrative. Save this video, download it if possible, listen to it over and over, use it to gauge what you are doing, and you will see results. By the grace of God, you will see results. Till I see you in the next video, I remain Mr. Akimbode, the King of Waves. Cheers. God bless you.